Every Filipino aspires to buy a piece of real estate in the country. But is it still affordable for most of our kababayans? We examined that and the future of workspaces with real estate service provider Santos Knight Frank's Rick Santos. Rick, great to have you with us on the program.
Great to be here, Rico. Great to see you again.
All right, as we ease our way out of this pandemic, what are the current trends in terms of workplace dynamics, office spaces?
Yeah, great question. I know I was here in the depths of COVID, and things have obviously changed a lot. We've gone from black swan territory into more like the Terminator. The property market's back. Back. It is indeed.
Revenge.
Revenge. Yeah.
Purchase of real estate property and leasing.
Absolutely. So on the office sector, Knight Frank, our group, Santos Knight Frank, is the largest real estate service provider, private globally through the Knight Frank network. And I think we've just completed a study, Dr. Lee Elliott and William Beardmore Gray. It talks about office trend moves, and it shows that office is not dead. 87% of all companies surveyed, so 350 global companies, 10 million people, 87% of them had a strategy to be back in the office somehow. So that's great news.
And of course, we saw the Philippine economy grow by more than 7% last year. The first quarter, it was 6.1%. Are we really seeing the numbers, these, booming numbers compared to the rest of Southeast Asia, trickling down into the office sector?
Yeah, we are starting to see that. I mean, obviously, since COVID is behind us, we are seeing more movement again. In the Philippines, IBPAP did a study, so over 80% of their companies are looking to expand. Call Center Association in the Philippines, over 80% of their people now are actually in the office. So call centers, BPO, shared services, especially globally when you're seeing tech retrenching and Wall Street retrenching, global cataclysmic events as we saw post-1997, that sort of spurs on the outsourcing sector.
But Rick, could this hiring of new people in the BPO sector, in the outsourcing sector, eventually slow down with the entry of artificial intelligence, taking over jobs from our kababayans?
Yeah, I think it's a good question. I think AI will wipe out some jobs. It'll also create a lot of new jobs. And I think what we see in the Philippines is, we always said the Philippines, if China was the brawn of Asia and India was the brains, Philippines is the heart. And so more than ever now, we're seeing that customer-facing work, that touch, that heart, that basically back office support being more important than ever. And I think AI will just force the Philippines to go up the value-added chain.
And of course, during the pandemic, we saw the rise of the digital platform. A lot more people buying online and using motorcycle taxi firms to deliver their goods and services. Is this revealing that we're seeing a slowdown now in a lot of retail shops taking up physical stores, brick and mortar retail stores?
Yeah, it's I think two things. One is the whole fulfillment angle, last mile logistics, and online has driven the warehouse sector, industrial sector, and with retail that's back as well, especially the F&B and also the clothing. So I was talking to some people at some of the big malls, and yeah, they're up to about 90%, 95% of where they were, and I think they're going to surpass pre-COVID levels. I think a lot of retail outside of town has also done well. So I think that retail sector is coming back strong. It's revenge spending, it's revenge dining, et cetera. And in the Philippines as well, people don't tend to save a lot, so there is a lot of consumption.
And what about the hospitality sector? Of course, over the past year, we've seen revenge travel. So a lot of hotels have been filled up to the brim. Yeah. I mean, full occupancy rates. But of course, what will really sustain the occupancy rates will be the influx of tourists and foreign business investments and foreign travel. What is the sense right now? What are the trends in terms of the hospitality industry and additional rooms being added to the market?
Yeah, there's over 2,300 rooms coming on this year in that sector. You're seeing the Shangri-La and Makati open up again, and you've got the Mandarin as well that's being built. And I think with hospitality, I came in from Hong Kong yesterday, and the airport was chock-a-block full, and travel is up at about 110% of pre-COVID levels. And the hotels, you talk to the guys at the Marriott. I mean, this is one of their best performing markets, and they continue to grow and expand. I think they're Clark Marriott, one of their best performing in the world. So, spend is up about 80% year on year.
But now the question is, we're seeing a lot of take-up, we're seeing a lot more rooms, but how do we compare in terms of leasing prices to our Southeast Asian neighbors? Are we still competitive? Or would multinational companies still like to be based in the likes of Hong Kong and Singapore?
Yeah, I think Philippines is really an outsourcing market, so it's really the Philippines and India. It used to be the Philippines or India. Now it's Philippines and India. From a apples to apples comparison, though, if you look at the efficiency from gross leasable area, Philippines ends up being much cheaper than India in a lot of the big markets, and also the infrastructure in the developed cities is actually a little bit ahead of India. India is a much bigger market, but India and the Philippines are two of the hottest markets now for outsourcing. I was in Hong Kong yesterday, and they're starting to come back, but it's way off of pre-COVID levels, and Singapore is obviously booming. But the Philippines and India continue to outperform in light of global outsourcing, in light of kind of downturns in the U.S., especially the tech wreck in Silicon Valley and places like San Francisco who are getting hit hard.
And we always know, Rick, that Filipinos aspire to own a piece of real estate, whether it be horizontal developments in subdivisions, or a piece of land, or in the vertical developments, office spaces, and make investments, or maybe in condominium developments. Are we seeing a glut here? I mean, we're seeing so many buildings rise. Are we seeing a glut in office space and residential condominium developments?
Yeah, office space, I think, two areas. One is a lot of this space that's going to be empty is the space that's kind of tier 2, grade B buildings.
What are those? What kind of buildings are those?
Buildings that don't have LEED certification, don't have a WELL certification. A lot of what multinationals are looking for now is green buildings that have the LEED designation, and I think a lot of that means that, and if a multinational wants to come in, one of the boxes they need to check on their list is making sure that they have ESG and sustainable development. So if buildings don't have a lot of the LEED qualifications and whatnot, they're going to need to probably redevelop some of the buildings that are 20, 30 years old. Look for redevelopment. If not, they're going to stay empty. So of those new buildings that are on the market, the grade A sector, the prime buildings are actually doing quite well.
What about the condominium developments? I get to go around Manila right now, and in BGC, in Makati, the prices are astronomical, between 400,000 to 800,000 pesos per square meter. Where are these prices coming from, Rick?
Yeah, the residential market is definitely back, and you get some mid markets that are in the 150 to 200, but definitely projects like Aurelia and whatnot in BGC are about 450, and the estate is about 600, and there's a couple of new planned projects in the Bay Area that are about 800,000 per square meter. So
Can Filipinos really afford that? Is our per capita income rising to be able to afford this kind of prices?
Yeah, I think that there's a lot more money circulating in the economy. You do see a lot more foreign investment coming in. I mean, Knight Frank does, in addition to office, does a lot of residential. So we're seeing a lot of high-end residential interest and a lot of groups coming in from overseas. And obviously, tensions with China and Hong Kong and Taiwan. So we're seeing new investors come into the Philippines. It's a little bit of a safe haven.
And with these prices so sky high, is this also being reflected? Are we also seeing these kinds of prices in other metropolitan cities outside of Luzon, such as Cebu or maybe Davao?
Yeah, the Cebu market has been pretty active. Cebu, Davao, Iloilo, and the second-tier cities. Places, third-tier cities, even places like Zamboanga City, where my father's from, and some of those other cities actually are out there on the radar screen. But I think with the Philippines and the U.S. relations probably at all-time high now, you're seeing a lot of kababayans coming back as well, looking for other places to invest their money into. So it's a good time for the Philippines. I was in Washington recently with a couple of delegations there, and I've never seen Philippine and U.S. relations so positive, and I've never seen so much interest. Now it's looking to come into the Philippines to invest in the office sector, in the residential sector, industrial and retail.
For some of our final word viewers who want some real estate tips, where should they be investing outside of these expensive metropolitan cities in the country?
Yeah, you talked about earlier, I think some of the beach cities as well, the hotel and resort sectors, whether it's up in San Juan La Union or whether it's down in Siargao, some opportunities in Cebu. We're seeing a lot of opportunities in some of the resorts areas, people looking to grow and expand. Bali has been booming, as has Phuket. So we think that sector is good value. But also, you can't go wrong in the Central Business District, whether it's in Makati or it's in BGC or down in the Bay Area. So we think real estate's still a great long-term hedge against inflation. And in an emerging market like this, we see opportunities across the board. And obviously, with coming off of COVID, there's a little bit of a downturn in the global markets. So this is the best time to get back into the market.
All right. Thank you so much for your insights on the Philippine real estate market. Rick Santos, Chairman, CEO of Santos Knight Frank.
Thank you, Rico.